These three stocks are set to bounce back and rally up after these signs show up. In this video, you will find out how you can actually participate right before the stocks take off by using simple pullback trading strategy or the breakout trading strategy. So let's get started now. The first stock is DPIH, DPI Holdings BERHAD. So at a first glance, you can see that DPIH has been in a strong uptrend within this up channel for quite some time since last year, August. And let me just zoom in a little bit here. So this portion right here, that's this year from February to March is very important. So this is definitely the sign of strength rally followed by a shadow type of the backup action. And that comes with a very aggressive volume, suggests that there's aggressive demand to push the price up. So right after the sign of strength rally and the backup action, we see that the price actually entering a parabolic movement up. So look at how sharp is this rally up, all the way from about 44 cents to about 65 cents. So in a very short period of time, it has just risen by about 50%. However, subsequently, we see that there is a reaction down that actually lasts until probably just last week. So about 2 months down move. So let's take a look at the volume signature here. So if you just take a closer look at this down wave right there in the down channel, we see that supply generally has been decreasing, especially in the last leg down here. So it's very low supply level, and subsequently there is another test. So also with very low supply, this actually suggests that supply has been exhausted and we can expect some sort of the rally up. And what is also important is that the price actually just hit the support level. This is kind of the horizontal support level, and also together with the uh, channel support as well. So you can see that this is the channel support plus the horizontal support. So it's quite natural for the price to bounce back up from this place right there. However, if we just take a look at last Friday's action, we do need to be careful because there is definitely some form of the supply come in. So let me explain further. Take a look at these two volume. They are pretty much similar. I would say pretty much the same. But these two candles are very different. So in terms of the upside result, I would say that last Friday definitely has definitely less upside results despite it is a up day. But if you just take a look at the previous day, that move is huge. So this is the progress to the upside. However, on Friday, the progress to the upside is just little. With a same amount of the volume, or I can say the efforts behind. So what actually kept the movement from going up further is the presence of the supply. So supply has been increasing, and that actually kept the movement from going up. So what we can expect from here on is probably a reaction down. So we just need to anticipate where it will kind of stop. And the immediate support level, I would say that is roughly around 52 cents. So if the reaction can just have reached roughly around 50 cent, 52 cent, or even a bit higher and form some sort of the reversal signal up, then I think that could actually form a very nice long entry. So the reward to risk ratio could be relatively high. The immediate target price, I would say, will be 62 cents, followed by the previous all-time high. Let me see, that's somewhere around 68 cents. So the stop should be somewhere around, if we take this reversal trade, if it really happen, probably will be below this big bullish bar at about 50 cent, or even further down at this bar here, so just below this bar. All right, so this is DPIH and it's indeed very bullish. So before I get to the next stock, I would appreciate if you can just like this video and also subscribe to my YouTube channel if you find it useful, and that will mean a lot to me. So back to the video. Next stock is DNEX. Okay, so DNEX is also a very high beta stock. So DAGANG net exchange BERHAD. So previously, we definitely see a very speculative run up. So you can see that if I zoom out until probably 2017, this is the previous swing high level, and we definitely do get a very depressed downtrend. However, there is a very strong and speculative run up that break out from this previous swing high level, subsequently followed by a very shallow type of the pullback that is great for trading itself. So let me just explain a bit more. So this is definitely a parabolic run up, and look at this run up. So despite this parabolic run up with the expanding of the volume right there, and this reaction down is not very threatening. Why is that? So first of all, in terms of the magnitude, so this is relatively shallow. So it did spend probably around 2 to 3 weeks the time in order to push the price down. But look at the results to the downside. It just barely touched probably halfway of the candle, this bullish candle right there. So this is a strength itself, and subsequently look at the supply level. So supply is very low, and that is generally a healthy type of the pullback. That's why we can expect some form of the continuation of the move. So if we take this breakout of the channel or breakout of the flag, then that could be a great long entry, and further by another speculative move up. So subsequently, we definitely see quite a lot of the supply come in, which essentially just stop the up move and into this downtrend or the down channel. But again, look at the supply level. Supply has been decreasing throughout the down wave, and generally it just hit the support level again. So if you remember, this line here is the previous swing high level, which now become the support level. So right after it touched the support level, it just sort of stopped the downtrend and followed by this up move. This is the bullish momentum bar that kick off the momentum. So we have a strong up move followed by another test, and here come another up move. And subsequently, let me zoom in a little bit here. So the trading sessions for the past 5 or 6 days are very interesting. So we can see that there is a spike of the volume that's probably related to the earning announcement with the spike of the volume. However, we do not really get a sharp reaction. In fact, this is probably the only reaction that we get, and subsequently the low is just getting lift up here, and with a sort of decreasing of the supply level. And again, this is a very good sign for the bullish movement up. And what I tend to do in this sort of the scenario is to just wait for a breakout. So as long as we see some form of the bullish breakout bar break above the immediate resistance level at about 83, 84 cent, I think that could be the time to get in and anticipate the price to rise to somewhere around the first level, maybe 95 and about 1. So 95 to 1 could be the natural place for the price to have some sort of the reaction. Okay, so this is the next. I think there's a definitely chance for trading. And last stock here is Maybulk. Okay, so Maybulk is in a very bullish, strong uptrend. If we look at the zoom out view, so this is a strong uptrend. And right after this sort of a very aggressive up move recently, so we see that there is some form of the routing. So probably the routing bottom breaking out and continue to the upside. Pretty much, I think that sort of fulfill the upside projection 1 to 1. And if we look at the supply level, there is definitely a spike of this supply coming out right at this bullish bar. So it actually looks very bullish, but it's very bearish in a way, because a lot of people actually selling into the strength, and also on the next bar as well, next few bars. So that's why you see that there's a spike of the volume, and make it even worse, it actually touched the channel overbought. So this is the channel overbought, and every time it touched the channel overbought, we see a reaction down back to the demand line of the channel. So this is not exception, and we see that there is a channel overbought right there, and here comes another reaction down, but this reaction is a lot sharper than the previous type of the reaction. And this is not surprise, because supply level is generally a lot higher. However, let me zoom in the recent price movement, probably the last 2 weeks price movement. It's quite interesting. So right after the sell-off or the reaction comes with the increasing of the supply level, we see that sort of just hitting the previous horizontal support level at about 55 or 57 cent. So this is a support level, and also touching this demand line. So from the channel up, okay. So quite a natural place to bounce back up. And right now, it's sort of forming the apex formation or the symmetrical triangle with the volume contracting. So I think it's quite a decent size before the price that can move out from this apex formation. In this case, I tend to want to wait until we see some form of the bullish movement up that can commit to the upside. Then this could be the long entry signal, with a stop probably somewhere below the bullish bar at probably 59 cents or even 57 cents. So the immediate target price, definitely this is the neckline here, about 67 cents. So 67 is the resistance. If you can break above, then I think we can see Maybulk challenge somewhere around 80 cents or 82 cents. So depending on your strategy or how you trade, you can also wait until it shows some commitment above this immediate resistance level at 67. Okay, so this is Maybulk and is super bullish. Alright, so if you'd like to learn more on how to increase your winning rate or other trading opportunities, definitely check out the video that showed up on the screen right now. And do remember to just join my weekly email list for exclusive market update or the ad hoc market update via my Telegram group channel. Thanks for watching. I will talk to you soon.